Okay guys, so this is the weekly chart. Let me write it down. Weekly chart. Okay, weekly chart means one candle represents 1 week, not 1 hour or 1 day. One candle means 1 week. Now let's look into the technical indicators. First comes the Bollinger Bands. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Because the market is trading between the lower band and the median of the Bollinger Band, the market is bearish. Then comes the moving averages. There is a clear fan out in the moving averages. Okay, secondly, the market is trading below the moving averages. This means that the market is bearish through the moving averages. Then comes the Ichimoku cloud. If you see that the market is trading below the Ichimoku cloud, this means that the market is bearish through the Ichimoku cloud. Now comes some other technical indicators. If you look into the MACD, MACD is clearly bearish because the MACD is less than the signal. Okay. Secondly, the difference between the MACD and the signal is normal. Okay, this means that the market still has a lot of potential to come down. Then comes the stock RSI. Now there is a surprise in the stock RSI, okay, this particular week, because the market was able to close, okay, around 3825. Okay, if you see that the K channel is now almost 26 and the D channel is 24, which means that the K is more than the D. K is greater than the D. Okay, but both K and D are less than 50, which means that overall, okay, on the broader scale, market is bearish. But technically, by definition, okay, for some time, market is bullish. Okay, so when we say bullish, bullish does not mean that the market is going to move up heavily. Rather, this bullish means that a short-term bullish. The short term means, okay, that this short term may be like 1 hour, 4 hours, or 1 day, okay, or maybe 2 days. That's it. And now, because this short-term bull movement is defined only and only by the stock RSI, this and all of the technical indicators are bearish. This means that the short term that we are expecting here, okay, it will really be a very short term upward movement. And if you look into the divergence, so the divergence is normal. Divergence means the divergence in the closing prices of the candles. Okay, this is normal. Now comes the volatility. If you see that the previous week the volatility was 199.34, all-time high volatility on the weekly chart, and this week it is 199.90. okay, again it is all-time high. This means that on the weekly chart, okay, every other week or every week, okay, the volatility is simply creating a all-time high, okay, in the last 100 years of history of the SP 500 index. This means that the market is heavily volatile. Now, through all of the technical indicators, it is clear that the market is bearish, okay, except the stock RSI, but on the broader scale, okay, the stock RSI is also bearish. This means that overall we can say like 95%, okay, through all of the technical indicators, market is bearish. Now let's move on to the daily chart to see what is going to happen, okay, on Tuesday, Wednesday, Thursday, etc. Guys, if you are not subscribed to this channel, then you can subscribe the channel and click on the bell notification icon so that you can get the timely notifications, okay, whenever I upload any informative video or the weekly technical analysis. So guys, this is the daily chart. Okay, daily chart means one candle represents 1 day. So let me write it down. Okay, daily chart. So before I do the technical analysis, okay, let me tell you the support and resistance levels. So as of now, okay, I'm not expecting the market to breach 4090, and this was the same thing that I've told you in the previous week also. Okay, so if you see that at the right hand side, okay, these are the support and resistance levels, because currently the market has closed at 3825. This means that anything above 3825 is going to act as resistance for the market. So we have 4090, then we have 4065, and then we have 4035. This is 4035. okay, these all are the resistances. Then we have some other resistances like 3990, 3935, okay, 3884. Then we have an immediate resistance for the market at 3840. This is at 3840. After 3840, then we have the support level. So we have support at 3791 because the market has closed at 3825, that is more than 3791. Then comes 3735, another support. Then comes 3710, okay, next support for the market. Then comes 3675, okay, next support. Then comes 3630, okay, this is a very good support for the market. Other than that, we also have a 200 week support. Okay, 200 week EMA. Okay, that is going to act as the support. But because the market has already found some good support two times. Okay, this means that now whenever the market comes down, okay, for the third time, then there will be very less chances that the market will be able to hold, okay, around 3636 or 3637 or around 3630. Okay, this means that whenever the market comes down, okay, it should be able to comfortably breach the 3630. Now after 3630, okay, we have some other support levels, and these support levels are mentioned here. Then finally we have 3500. Okay, so if in the current week, means if in the coming week, if the market comes down, then I am not expecting the market to breach 3500. Okay, so any movement in the market will be restricted to 3500. So guys, these are the support and resistance levels, okay, for the coming week. Okay, means from July 5th to July 8th. Now let me show you something. And this is about the YouTube membership. So I have announced the YouTube membership last week, and now many people have joined the YouTube membership. So you will see that many people have opted for the all midweek updates. And if you want to join the YouTube membership, so the process is very simple. So I've given the link of the channel, okay, in the description and also in the comment section. So when you click on that, then you will see this screen, okay, and then you will notice that there is a join button, JOIN, join button, okay. And when you click on the join button, so once you click on the join button, okay, then this pop-up will be there. Okay, then you have these two options, okay, only one midweek update per week or all midweek updates. Okay, and if you opt for only one midweek update per week, okay, then you know that there are 4 weeks in a month. This means that you will get a minimum of 4 or maximum of 5. Okay, so sometimes there are 5 weeks in a month, so only 4 to 5 midweek updates in a month. Okay, and the cost is only $50. Then you have the second option. This is all midweek updates. Okay, so all midweek updates means whether there are 2, whether there are 3 or 4 or 5, okay, in a week, so you will get all of the midweek updates. This means that you will get a minimum of 10 midweek updates, okay, and maximum will be, okay, approximately 16 to 17. And the cost of the all midweek updates is only $150 per month. Okay, so this cost, okay, $50 or $150, okay, it is for a month, for the whole month, okay, not for a week. Now let's do the technical analysis, okay, on the daily chart. First comes the Bollinger Bands. This is the lower band of the Bollinger Band, okay, this is the median of the Bollinger Band, because the market is trading between the lower band, okay, and the median of the Bollinger Band. This means that the market is bearish through the Bollinger Bands. Okay, then comes the moving averages. Now if you look into the moving averages, there is a clear fan out in the moving averages supporting the bear trend. Okay, other than that, most important thing, okay, and the most important part is the closing of the market just below the lowest moving average. Okay, just below the lowest moving average. So now because the market has closed, okay, for 4 continuous days below the moving averages, this means that the market is bearish through the moving averages. However, there is a problem, okay, and the problem comes through the Dow Jones. Okay, if you notice that the closing in the Dow Jones, okay, on the 1st of July is above the first moving average. Okay, this particular moving average. And as you know that the movement of the Dow Jones, okay, and the S&P 500 is almost similar. Okay, and even the candles that are forming, okay, on the chart, they are also almost similar. This means whatever is happening in one index, okay, it will be reflected in another index. Means if it is Dow, then the reflection will be there in the S&P 500, and if it is S&P 500, then the reflection will be there in the Dow, because both Dow and the S&P 500, okay, they use the heavyweight of the market. Okay, heavyweight means, for example, Microsoft, okay, Apple, Amazon. So these are the heavyweights. So both of these indices, they are using the heavyweights. So basically what I was trying to tell you is that the closing of the Dow Jones, okay, was 31097, whereas the moving average was 31036. Okay, and the closing was 31097. This means that now the Dow has again entered into a conflicted zone. Okay, a conflicted zone means whenever the market is trading, okay, in between the moving averages, okay, that is where we call as the conflicted zone. Okay, and this is where the market is tangled, okay, and the movement of the market is not known. Okay, so all of a sudden you can see that the market is moving up, market has closed above the moving average, and all of a sudden the market can come down, or the market was tangled between the moving averages, and all of a sudden, okay, there was an upward movement in the market. Okay, this means even though S&P 500 index has a clear direction, okay, that or a confirmed bearish trend, absolute bearish trend, okay, through the moving averages, so the impact of the Dow will be felt in the S&P 500 also. So we will discuss the impact, okay, when I will deduce the probable movement of the market. Okay, so let me first complete the technical analysis. Then comes the Ichimoku. Okay, if you see that the market is trading below the Ichimoku cloud, this means that the market is bearish. Okay, and now we look into some other technical indicators, and if you see, first comes the MACD. So MACD, if you notice that MACD is marginally bullish, okay, because the MACD is more than the signal, but because the MACD, okay, and the signal both are negative, this means that on the broader scale, okay, the big picture is that the market is bearish. This means that if there comes a short-term bull trend, okay, then that will be limited to like 1 hour, 4 hours, or 1 day, okay, or at most 2 days. That's it, not more than that. Then comes the stock RSI. Okay, now again the stock RSI has surprised, because on 30th of June, okay, stock RSI had changed its direction from bulls to bears. On 30th of June, the K channel was almost 65 and the D channel was 70, and the K was less than D. This means that on 30th of June, stock RSI was bearish. However, on 1st of July, okay, the K is now almost 69 and the D is almost 68. Okay, so there is a very minimal difference, but yes, there is a difference. Now the K is more than the D. This means that the directional stock RSI, okay, and other than that, both K and D are above 50. This means that the directional stock RSI is bullish. Okay, or not just directional, but the stock RSI is bullish. Now, because the stock RSI is bullish and the MACD is bullish, and whenever the stock RSI and the MACD both are bullish, okay, then the market gains some bullish momentum, okay, and the market has tendency to move up. But again, both MACD and the stock RSI, because there is a marginal difference in both of the cases, this means that a short-term bull movement can't be denied, okay, but this short-term bull movement will be limited to like 15 minutes, 1 hour, 2 hours, 4 hours, okay, 1 day, or at most 2 days, okay, that's it. But if there comes any abnormal movement in the market, okay, then I will update the members through the midweek updates. Then comes the divergence. If you look into the divergence is normal. Divergence means that divergence in the closing prices of the candle, so this is normal. And now if you look into the volatility on the daily chart, so volatility is 89.73. This means that the market is less volatile, but in actual the market is not less volatile, because again, if you see that again, okay, the market is trading around 90, approx 90 levels, okay, and the all-time high was 105. This means that the volatility is still, okay, around 90%, okay, of the all-time high level. So now we come to the conclusion that some of the technical indicators are saying that the market is bearish, okay, and some other technical indicators like the stock RSI and the MACD are saying that the market is bullish. This means as of now we will say that the direction of the absolute direction, okay, of the market is not known. But yes, okay, on the broader scale, okay, on the bigger chart, okay, it is clear that the market is bearish. And we are in the recession. Do not forget that we are in the recession. Okay guys, so we have seen that as of now, okay, the market is neutral, okay, at least for the coming week. The direction of the market is not known, but in actual, on the broader scale, it is confirmed that the market is bearish. Okay, so this means that whatever happens in the market, okay, and even a single bad news from the market will simply drive down the market, okay, not up. But if there comes a good news, okay, in that case the market can try to give you a little bit retrace, but this retrace will be very, very limited, okay. But even a single bad news, it will simply drive down the market, it will simply pull down the market heavily. Now let's see what is going to happen, okay, on Tuesday, Wednesday, Thursday and Friday. Okay, so we are going to deduce the probable movement of the market for the coming week. So as you have seen that the last candle that was closed here, okay, it was a bull candle, but the closing of the candle, okay, it was below the moving average. Now because there is a long weekend, okay, this means that if the open of the market on 5th of July, that is Tuesday, if the open of the market is below 3832, okay, if it is below 3832, this moving average, in that case the market will try to move up and it will see some good resistance, okay, because of this the moving average at 3832 or 3831. And if the market fails to clear this resistance, okay, in that case the market will come down, and when it will try to come down, then immediately it will find support at 3791. Okay, 3791. This means that when it comes down immediately, then again it can try to move up. Okay, and if in the second time, if it is able to breach this the moving average, then it will find immediate resistance. Okay, not just in the second time but also in the first time. Whenever it is able to breach this the moving average, okay, around 3831 or 3832, in that case immediately it will find some very heavy resistance at 3840, and immediately after 3840 then comes, you know, a second moving average. Now this is the second moving average. Okay, so on Tuesday the second moving average will be around 3864, okay, or maybe around 3870. Okay, so 3870. So this moving average will be around 3870. So when it moves up, then it will find, okay, again a heavy resistance because of the moving average 3870. Then thereafter comes 3884. Okay, 3884, the same heavy resistance, okay, that blocked the market on 24th of June for almost 4 hours. Okay, and after 3884 or around 3884 or just above 3884, okay, there comes the next very heavy resistance because of this moving average, and this is the same moving average because of which the market failed to move up. Okay, and this moving average on that day, on Tuesday, it will be around 38890, okay, or 38891, etc. So what this means is that the upward movement will be severely restricted by the moving averages themselves. Okay, and other than the moving averages, we have our calculated resistance levels. So there is going to be a very heavy resistance, okay, because of the moving averages and because of the calculated resistance levels. Now comes the Dow Jones in the picture. Okay, this means that if on 5th of July, that is Tuesday, okay, if the market try to move up, okay, irrespective of the open of the market, if the market try to move up, in that case the upward movement of the Dow Jones will be restricted by this moving average, which is around 31250. So on that day you can say like 31240, and just above the 31240, okay, we have 31290. This means that Dow Jones is going to face a very strong hurdle, okay, from 31240 to 31290. Okay, and if you see that the Dow is struggling on Tuesday, okay, and not just on Tuesday but okay, but on Wednesday, means whenever the market try to move up, if you see that the Dow is struggling, okay, from 31240 to 31290 on Tuesday or on Wednesday, in that case, okay, you will notice that the SP500 will also be struggling, okay, around these levels, and then that will be an indication that rather than the upward movement, the market is going to come down. Because see, we are very clear that the long term movement, means the movement on the broader scale, okay, is completely bearish, okay, and we are in the recession. Okay, so as you know that we are already in the recession, and this is what I am telling you, okay, for last 6 or 7 months, okay, from the first week of January 2022, that we are going to enter into the recession. But now we are confirmed we are in the recession. Okay, so that is the reason, okay, why we are absolute bearish. This means that any struggle, means whenever market sees some struggle, okay, during the upward movement, then it will simply bring down the market. Now some of you might question that why don't we use the fifth retracement, okay, on this the chart. Okay, in that case, let me tell you that because the movement was very limited, in that case the fifth retracement is not going to work, okay, as it worked particularly when the market came down heavily. Okay, so this means that as of now we cannot heavily rely on the fifth retracement, and we need to look into the open of the market, especially on Tuesday. Now guys, there is one more thing, that if the open of the market on Tuesday, particularly on Tuesday, okay, if it is below 3791, then it will trigger some good selling in the market. Okay, and this will happen only and only if the open of the market is below 3791. Okay, and other than this, if the open of the market is above the closing price of the candle, that is 3825, and above this moving average at 3832, in that case again, okay, this moving average, it will create hurdle, okay, for the upward movement. Then comes our resistance level, then comes, okay, another moving average. This means that there are multiple hurdles. But if for some reason, again I repeat, if for some reason, if on Tuesday, if the market is able to breach, and if the market is able to close, not the breach, but if the market is able to close above all of the moving averages, then for sure the market will see another day, means the market will see a bull movement on Wednesday also, that will be 6th of July. Okay, and whenever that movement happens, then that will be restricted by 3935. Okay, then we have 3990. Okay, then we have 4035 and other resistance levels. But as of now, okay, I'm not expecting the market to move beyond 4035 again. And this is the same thing, okay, that I told you last week also, that even though the market is moving up, okay, but whatever happens, market won't be able to breach 4035, because 4035 will create a very heavy resistance for the market. Okay, and the same thing is I am telling you now, that whatever happens as of now, okay, if the market is able to close above all of the moving averages, okay, on 5th of July, in that case there is very heavy probability that the market will see an upward movement on 6th of July. Now there is a catch, okay, and this catch is that we must see two bull candles, okay, means not two bull candles, but two consecutive closings, okay, above all of these three moving averages on 5th and 6th of July. Then only we can say that now the market is going to move up. But if there is only one closing above all of the moving averages on 5th of July, okay, and on 6th of July the market moves up, it comes down, and it closes between the moving averages or below the moving averages, in that case on 7th of July the market will for sure, it will come down. The impact of the previous candle, or the impact of the previous closing on 7th of July, okay, will be seen on 8th of July. So this is how the market is expected to behave, okay, in the coming week. And do not forget that the market is bearish, okay, and we are in the recession. This means that whenever you see that the market is struggling and the market is not able to close above all of the moving averages, or the market was able to close above all of the moving averages only one day, okay, but on another day it closed below the moving averages, okay, in that case the market will come down. So as of now, any retrace in the market will be an opportunity to short sell or to buy put options, okay, but where exactly to buy the put options or to short sell, okay, for that, okay, you need to look into the resistance levels, okay, these resistance levels especially, okay, and secondly, not just the resistance level, but the willingness of the market to break that particular resistance level, okay. So if you see that the market has breached a resistance level, so market was struggling for like 15 minutes for 1 hour, and then it was able to breach the resistance level, okay, in that case market will move towards the next resistance level, okay, and then the same thing, but whenever the market moves up and it comes around 4035, now because there also comes the body of the Ichimoku, means the lower band of the Ichimoku, so it will create double resistance for the market. And this is why I am saying that any upward movement, okay, will be restricted to 4035. And some people are saying that in the second half of the 2022, okay, SP 500 will be bullish, or overall the markets will be bullish. So as of now, let me make it very clear that until and unless inflation is not coming down, until and unless the Federal Reserve stops the rate hike, okay, market is not going to retrace, or the market is not going to gain the bullish movement. So guys, you can join my YouTube membership to get the timely midweek updates, okay. So I've given the link in the description of the video and also in the comment section. And also there is one more thing that some of you have inquired, okay, about the knowledge transfer. Some of you want to learn about the S&P 500 index, okay, how to deduce the trend of the S&P 500 index, okay, and what technical indicators I am using, what are the parameters of these the technical indicators, and also you want to learn some profit booking strategies of the market, okay. So for that I am going to introduce the knowledge transfer, okay, and there will be some levels and you can choose any of the level, okay, and you can learn accordingly, okay, whether you want to learn each and everything about the S&P 500, how it works, and how to deduce the accurate trends, okay, of the S&P 500 index, and how to identify the traps, okay, how to see whether the market was manipulated or not, means everything about the S&P 500 index. So it will also be there. So most probably from the next week, okay, I will introduce this system. Anyways guys, hit like if you have liked this video, and subscribe to this channel, and click on the bell notification icon, so that whenever I upload, okay, the technical analysis or any informative videos, okay, so you will get the timely notifications. So guys, this was my weekly technical analysis for the week of July 5th, okay, from July 5th to July 8th, 2022 for the S&P 500 index.